The moment you hand over your first dollar to the market, you're already losing. Strange, isn't it? The loss isn't in the stocks, not really. It's deeper, smaller than a cent, but louder than a warning siren. Your brain doesn't see it yet, but your habits are already sinking your future wealth. Close your eyes and imagine the market as a storm. Each tick of a stock chart like a raindrop piercing your skin. Tiny at first, harmless almost. But after 1,000 ticks, 1,000 tiny stings, the storm becomes a hurricane. Your money, it's that single leaf caught in the wind. Where did this storm begin? You probably thought investing was simple. Pick a stock, buy it, wait, and hope for the best. Almost everyone starts here. Yet there's a hidden trigger that turns this supposed simplicity into a trap. It's ancient, predates Wall Street, predates even coins. Fear, greed, impulse. Neurons wired for survival, not for compounding interest. Most beginners don't realize they are prisoners of their instincts. The market is not kind to impulses. One tiny mistake or rush to buy a hot stock based on a headline can cascade like a landslide. Money disappears, but the lesson? You only feel the burn. It doesn't register in real time. Think of it like this. You're walking along a cliff at night. The path is narrow. You hear distant whispers. Buy, sell, hurry. You stumble. One misstep. Gravity doesn't care. The cliff is merciless. That's the market for a first-timer. Every decision seems small, every mistake feels isolated, yet each error compounds, often invisibly, until the account you built with discipline erodes in silence. Now scale this up. The average American investor in their first year loses nearly 10 to 15% of what they put in, not because the stocks were bad, but because the mistakes are predictable. Like clockwork, they chase trends, panic at minor drops, abandon plans when the headline screams. One novice account can create a ripple that affects the brokerage algorithms designed to favor the most patient investors. Here's a less obvious truth. Markets are designed for patience and strategy, not emotion. Every algorithm, every market maker, every financial newsletter anticipates the exact human reaction you're about to have. They know your brain loves stories, not numbers. So when the market drops 2%, your instinct screams sell, just as the professionals quietly buy more, doubling their future gains while you exit in fear. Imagine a cheetah hunting in the savannah. It doesn't just chase any movement, it studies patterns, waits, and strikes only when the odds favor success. A beginner? You're the gazelle, startled at every shadow. Every loss is the cheetah's invisible paw touching your flank. It's brutal, relentless, and elegant. The market isn't personal, it's predatory in the quietest way. And yet, this is not the full picture. There's a mysterious origin to your own vulnerability. Evolution wired humans to react instantly to threats, a lion in the grass, a flash of fire. Money, stocks, charts, these are modern inventions. Your brain doesn't distinguish. A sudden red candle looks like a predator. A headline about a crash feels like imminent death. So you flinch, you sell, you lose. The irony? Evolution helped us survive, but now it makes us lose money. Ask yourself, what if that panic didn't exist? What if every novice could pause instinctively, breathe, and step back? A beginner's loss isn't unavoidable, it's self-inflicted, predictable, yet invisible. It's the shadow lurking in every first investment. Here's the weaponization phase. Most losses come not from risk, but from overconfidence. The first trade that makes 5% feels like genius. The mind inflates. Suddenly leverage seems reasonable. Small wins seduce the brain to ignoring risks it instinctively fears. Then the inevitable drop happens, bigger than expected, and the beginner flails, selling under pressure, taking a loss that could have been avoided with one simple rule: patience. What if I told you the vast majority of early losses come from ignoring this one pattern? Not the stock, not the timing, but the repeated human misstep, reacting emotionally. The market doesn't care. Algorithms, whales, funds, they move with cold calculation. You move with fear and hope. Your first year becomes a series of tiny self-inflicted wounds, invisible at first, devastating over time. Now picture an alternative scenario. You sit at a desk, a stock dips 8%, your pulse rises. Normally you'd panic, but this time something clicks. You remember that the market is bigger than you, that trends recover, that history shows resilience. You don't sell, days pass, weeks, the drop reverses. Gains accumulate silently. You don't feel like a genius, yet the account grows. You are no longer prey, you are patient, you survive, slowly, deliberately. But here's the cruel twist most beginners never see coming. Even when you learn patience, even when you avoid early pitfalls, there's another layer: compounding mistakes in lifestyle. Overtrading apps, impulse checking, comparing yourself to friends or influencers. Each micro decision triggers small losses that are not obvious in real time, but accumulate. Your brain adapts, remembers the pain, and reinforces the fear, a subtle, persistent predator lurking within your own mind. Think of this like a shadow virus. It infects the account silently. The first trade might be fine, second trade might also succeed. Third trade, small deviation in risk, unnoticed. By the time a beginner notices the pattern, the damage has spread. Emotional losses amplify real losses. What looks like a $200 mistake becomes $2,000 over months. Invisible erosion, painless until it's not. The human mind is fascinatingly cruel in this. You'll remember the wins, forget the small errors. Confirmation bias hides the bleeding. And when the real collapse happens, a sudden market drop, a headline panic, the damage feels like lightning from a clear sky. Yet it was decades in the making, encoded in instinct, emotion, and tiny habitual errors. Let's pause here. Imagine this. A single choice today, a small impulse buy or panic sell, dictates your financial fate months later. Invisible, yet monumental. You feel small, insignificant. The market is massive, billions of trades, trillions of dollars, algorithms running at speeds your brain can't comprehend. You are one human in a vast ocean, a leaf in a storm, trying to navigate forces far beyond your scale. But there is hope. Understanding the hidden enemy, your instinctual reactions, your evolutionary wiring, the market's predatory patience, gives you a shield. Awareness doesn't stop the storm, but it lets you move differently, strategically, methodically. The first beginner's loss is not a trap if recognized early. It becomes a teacher, brutally honest and silent. Part 1 ends here, leaving the unease lingering. You now know that the danger isn't the market, it's inside you. The storm is out there, but the predator, the virus, the cliff, it's in your reactions, habits, and decisions. Survive these first steps, and you might just start building real wealth. Fail, and the pattern repeats quietly, invisibly, until it snowballs.
The storm didn't stop. You thought surviving the first crash was the hard part. It wasn't. The real danger is invisible, hiding in the pauses between market ticks. Every day, billions of dollars move, but the predator is subtle now, your own impulses magnified by experience or the lack of it. Think about that first small win. Maybe your stock jumped 5% and your chest swelled with pride, but that pride is a trap. It whispers you're smarter than you are. Suddenly, you think leverage is fine. Suddenly, the rules that once saved you feel optional. Every human in their first year of investing faces this mirror. Success lures them into overconfidence, a predator camouflaged as reward. You glance at the op again, notifications blink, your heart races. Should you sell? Should you buy more? Pause, watch the pattern. The market is patient, you are not. Algorithms know your impatience, they feed on it. Every click, every decision, even your hesitation, it's data. You are a walking target. Imagine tiny leaks in a dam. Alone, a drip is harmless. Together, they collapse the wall. Beginner mistakes are like that. Each small emotional reaction, selling too soon, chasing trends, checking prices compulsively, adds up. It's not dramatic, it's slow, invisible. But one day, the dam bursts. Your account drops. You blame luck, you blame the stock. But luck never taught a lesson. You did. Now consider this. The market doesn't care about your history. It doesn't remember your losses or wins. Each day is a reset. The beginner who panicked last month, they are the same vulnerable human today, and the next time a red candle appears, the cycle repeats unless something changes. Here's a brutal fact. The majority of first-year investors will experience losses ranging from 8 to 20% of their initial capital, some more. It isn't a random accident, it's mathematically predictable. Panic is predictable, impulse is predictable. The market is not random, it's just bigger than your intuition can handle. Imagine a chessboard 1,000,000 squares wide. You are a pawn. The opponent? Countless invisible hands moving pieces at impossible speeds. You make a predictable move, they capitalize. You survive one turn, but you are still exposed. That's the reality for beginners. And the worst part? You don't see it until it's too late. But what if you could cheat the system? Not with insider tips or magic stocks. No, this cheat is subtle. Awareness, discipline, the ability to sit through the storm, to watch numbers fall without flinching. The human mind wants action, it craves movement, but sometimes stillness is survival. The market punishes impatience, it rewards calm. Let's step deeper. Beginners don't just lose money, they lose time. Every emotional trade isn't just a dollar lost, it's a lesson that could have compounded. That $500 lost impulsively today could have grown into $5,000 in 10 years with patience. Each reaction is a missed opportunity, a silent thief robbing the future. And here's a twist you won't see coming.
Even the experienced investor struggles with the same impulses, though with smaller stakes. Imagine your younger self, panicked at a minor dip, now sitting across the table, older, slightly wiser, watching the exact same numbers. The difference isn't the market, it's the mind. The predator never sleeps, it just adapts. Now imagine applying this lesson. You pause at every notification. You ask, is this action necessary or am I reacting? You watch patterns over days, weeks, months. Slowly, you see the predators clearly. The market loses its edge over you. You begin to understand the rhythm, the silent signals. You survive losses that would have destroyed a beginner. You gain patience, the ultimate weapon. And yet, even with awareness, danger lingers. Every sudden headline, every unpredictable geopolitical event, every flash crash, it reminds you that control is always partial. You can't command the storm, you can only navigate it. The invisible predators, the impulses still lurk, waiting for fatigue, distraction, or greed to strike. Picture your account over 10 years. Small missteps early compound into massive divergence, but small wins, patience, and strategic inaction also compound. The power of the market is neutral. The advantage lies in your behavior. Beginners lose because they surrender control to instinct. Survivors thrive because they master it. Now consider this. A subtle psychological weapon, detachment. Observe without emotional attachment. React only when a clear advantage appears. Your first losses are like fire refining gold. They hurt, but they teach. Each mistake becomes a checkpoint, not a trap. The real predator isn't the market. It's the mind that panics before it thinks. Now let's consider a shocking reality. Technology amplifies human error. Every alert, every notification, every social post is engineered to provoke reaction. Algorithms are predators designed to exploit your impulses. You are no longer just fighting your mind. You're fighting a system built to turn instinct into loss. Beginners unaware of this face overwhelming odds. But here's a glimmer. Awareness multiplies power. Knowledge converts fear into strategy. When the beginner finally recognizes the subtle predators, impulses, algorithms, emotional traps, they gain an unfair advantage over millions. The storm still rages, but now they're sailing with the wind instead of against it. They anticipate, they survive, they slowly grow. The final twist, even mastery doesn't end the fear, it evolves it. The market constantly creates new unknowns. Each era brings innovations, bubbles, and shocks that stress test patience. The human mind is the battlefield. You may never escape vulnerability entirely, but understanding the traps, the predators, and the patterns keeps you alive long enough to harness the compounding power of the market. The silent threat, the one that strikes first, is often invisible. Impatience, greed, panic. Beginners lose because they fail to see it until the losses scream. Survivors win because they respect it. And even then, the shadow never fully disappears. It waits, subtle, patient, teaching each new investor that the real danger always lives inside. By the end of this journey, one thought remains. Your first investment loss isn't random. It's a reflection of human psychology, magnified by a system that anticipates every instinct. Survive the first year, and you survive the storm. Fail, and the pattern repeats, invisibly eroding wealth, confidence, and time. The question you're left with, will you be prey, or will you see the predators clearly, adapt, and survive?